Imagine two people. Both start investing with the same money. Both invest for the same number of years. But at the end, one of them has $1 million. The other has much less. What did they do differently? The answer is surprisingly simple. They chose one small investing strategy that most people ignore. And it only involves two famous ETFs, VOO and VTI. At first glance, these two look almost identical, but tiny differences between them can completely change your long-term results. Think of it like choosing between two roads. Both go to the same city, but one road is faster, smoother, and safer. The question is, which one should you take? Today we break down what VOU is, what VTI is, why millionaires love them, and the simple strategy that could turn small investments into $1 million. Let's start with the basics. First, what exactly is an ETF? Imagine a big basket. Inside that basket are many companies: Apple, Microsoft, Amazon, Google. Instead of buying each stock one by one, you just buy one basket. That basket is called an ETF. Now let's meet our two baskets. VOO tracks the S&P 500. That means it invests in the 500 biggest companies in America. Companies like Apple, Microsoft, Amazon, Nvidia. These companies are the giants of the economy. Think of them like the captains of a sports team. They lead the market, and historically, the S&P 500 has returned about 10% per year over the long term. That's why many investors call it the easiest way to build wealth. But now, meet its bigger cousin, VTI. VTI tracks the entire US stock market, not just the biggest companies, but also medium companies, small companies, growing startups. Instead of 500 companies, VTI holds more than 3,500 companies. Think of it like this. VOU equals the top athletes. VTI equals the entire league, every player, every team, every rising star. But now the big question appears. Which one is better? And this is where the story gets interesting. Let's meet two investors, Alex and Jamie. Both start investing $500 per month. Both invest for 30 years. Both want to reach $1 million. But they choose different ETFs. Alex chooses VOO. He believes big companies are safer. He wants stability, less risk, more predictability. Jamie chooses VTI. Jamie believes small companies might become the next giants. Today's tiny company could become tomorrow's Amazon. For years, both strategies look almost identical. Year after year, the market rises. Sometimes it falls. Sometimes it crashes. But something interesting happens. During certain periods, small companies grow much faster than big ones. And when that happens, VTI quietly pulls ahead. But other times, the largest companies dominate the market. And when that happens, VOO takes the lead. So who wins? Here's the surprising truth. Over long periods, their returns are extremely close, almost like two runners racing side by side. Sometimes one runner moves ahead, then the other. But both keep moving toward the same finish line. And that finish line is called compounding. Now let's reveal the real secret. The $1 million strategy is not about choosing the perfect ETF. It's about staying invested, year after year, crash after crash. Imagine a snowball. At first, it's tiny, but as it rolls down the hill, it gets bigger and bigger and bigger. That is compound growth. And ETFs like VOU and VTI are perfect for this because they are diversified, low-cost, long-term focused. Now watch what happens. If someone invests $500 per month for 30 years at roughly 10% average return, that investment could grow to nearly $1 million. Not from luck, not from trading, just from consistency. So, VOO versus VTI, which one should you choose? Here's the honest answer. If you want the largest companies only, VOO is great. If you want the entire US market, but the real winning strategy is this. Start early, invest consistently, and never panic during crashes. Because the biggest mistake investors make is quitting too soon. Remember, the stock market rewards patience, not perfection. And sometimes, the simplest strategy is the one that creates the most millionaires. If this video helped you understand investing, make sure to subscribe, because the next video will reveal the lazy portfolio that beats 90% of investors. And trust me, it's even simpler than this.